everyone knows I've been writing about a lot of turnaround situations especially over the past 3 years with all the distressed and underperforming properties. And one company, Platinum Healthcare, they have almost made it a specialty on buying turnaround properties. They'll buy non-turnaround, but they do a very good job on buying underperforming assets, investing in them, and making them work. And I'm here today with Ben Klein. He's the CEO and founder of Platinum Health. And in the past 3 years, and I didn't really even know the statistic until recently, you have grown from just 8 facilities in 2 states to 28 facilities in 5 states. And, which is, I think, unbelievable, you own 25 of the 28 properties in a time when most people are leasing or managing and all that. And I know you couldn't have done all this without my friend Paresh Ripani, but what's your success? How do you do this?
Well, you hit the nail on the head. It is great staff, great CFO, great operating staff, great staff in the buildings, and great line staff. We invest in the staff, try to retain the staff, and they've been great. And they've been able to operate them and operate them better than when we buy them, when we fix them up, and they've really done a great job.
But you do invest in mostly turnaround situations. Why is that?
Because the turnarounds really have the most potential to build equity and upside, and take a building that you buy for X and make it worth 3 times X.
3 times X.
We have to put money into the buildings to make that happen, and we invest in the physical structure. We invest in the staff. We have online training. We own an online training company, so we invest in training the staff and retaining the staff. And if you do all those things, usually it all comes together.
But especially in the last 2 years, financing has been difficult for almost every buyer. A lot of deals have been held up because the buyer couldn't get financing. And that's even for stabilized properties. So how are you getting debt financing, for properties that are either not cash flowing or really suboptimally cash flowing?
Well, I think the banks. The proof's in the pudding. The banks like the fact that we can operate, and we really do. And we have a track record to operate and fix those types of buildings. We put in our own equity, so they believe that we're as committed to the deal as we're not just picking up a lease for a small amount of money, but we've got a lot of money committed, and we put a lot of our own capital into capital improvements, and so we're as committed to fixing it, and we've had a track record. So it's the track record that does it.
Well, I was going to say, how important is that? I mean, having that track record of these turnarounds, has that been the key with lenders? Because the proof's in the pudding, you've done it.
In the last 2-3 years, yes. If we had tried to start doing these kind of turnarounds in the last 2-3 years, I'm not so sure we would have gotten the capital. Having the track record before this banking crisis certainly helped, and the banks knew that we had the track record to do it, and they believed in the fact that we could turn them around, and they know that we keep capital in the buildings, we put capital in the buildings, and we keep capital for that rainy day, and they know it.
And when looking at these turnarounds, which ones do you see have the highest financial reward? Is it on the skilled nursing side, or assisted living, or not property specific?
Yeah, I don't want to punt that, but it's really both. It depends on the deal. It's really very specific to what the deal is and what kind of turnaround and what kind of upside. They're just different. Each one's a little different.
What's the hardest thing in looking at the turnaround? What's the hardest thing for you to figure out whether you're going to be able to turn around when you're looking at it as an acquisition?
In the skilled market, some of that's the really older buildings. You're trying to figure out if you can make some of those really old buildings, bring them into anything current, and some of those are just very difficult. And sometimes you ponder whether you're going to be able to do it or not. I think that's the most difficult. The older buildings are really hard as they get older to figure out how to bring them into something current that you can sell today. That's the hardest part.
And when looking at how many do you look at compared to how many you buy?
A lot. I mean, there's a lot of deals that we pass on, we don't even look at, or we look at and we decide to pass on. There's a lot of deals, but there's a lot of regurgitated deals.
Right. And then after you turn them around, where's that decision on, do you refinance, do you sell? Because I think you've sold a couple properties you've turned around, but on the whole, you're kind of keeping them.
Yeah, we sold 3 buildings in 2 different transactions because someone came to us and offered us, everything's for sale, but offered us enough money that it wasn't worth keeping. For the most part, we keep them. We're not looking to sell, but we try to refinance into, some HUD or some kind of longer term fixed rate environment so we don't have to worry about interest rates. And just keep operating and use that cash flow to buy more.
And you just completed a pretty good size skilled nursing portfolio in Missouri, the acquisition of it. Are you going to be looking at more portfolios of that size, or?
I think we will be looking at them, but we don't want to lose sight of the 1s and 2s, these kind of acquisitions. I don't want size to be the dictator. It's really about the deal, and the deal's got to make sense. We don't like to overpay. We want to make sure we're in at a good number so that we can put the money into the building and not have to worry about improving it and operating a mediocre building. But we'll look at portfolios, but we're not going to take our eyes off the good one-offs.
Right. And I'm just kind of curious, you may not know this number off the top of your head, when you buy an underperforming, distressed property and you put money into it, is there any kind of relationship between the purchase price, let's say you buy it for $5 million, and you may think it's going to be worth 10 or 50 million, is it, do you put in another 30% of the purchase price, 50% to really?
Each deal is different. Each deal is totally different. All depends on what the deals need.
Okay. And then, I know you've also gotten into the Medicaid assisted living waiver business. I think you're in Ohio and Indiana?
And Illinois, yes.
And Illinois, okay. And you've been converting hotels. Is that going to be a bigger part of your business going forward, do you think?
I think that either converting hotels or buying purpose-built assisted livings, we bought some of those too, and just taking the waiver program where they might not have taken it before, but if you buy the real estate well enough, you can still afford to take the Medicaid patients. I certainly think we're going to be buying more or converting more of those.
And do you hear anything in those states, Indiana, Ohio, and Illinois, about with the budget problems, what that may do to the Medicaid waiver rate?
For the most part, they still view the Medicaid waiver programs, or in Illinois it's called the SLIF program, as a cost savings from the skilled. So the line item, it's maybe 0.5% of the skilled budget. So that's really not where they're looking to save their money. If they're going to cut, it's probably going to be in the skilled market, which a lot of states are talking about, sitting on the table in a lot of places. We all have to hope this economy picks up quickly.
I'm not sure about that.
I'm not either.
And then for the rest of 2011, with that, you've already bought, 12 properties this year in the first quarter?
12 so far.
Is that going to do it for the year, or do you think you're going to be buying more?
Well, we got another one scheduled for May 1st already, so there's definitely another one coming up. Whether we'll do any more this year, it depends if we find a deal. We certainly have the capital still to put into deals, but you got to wait for the right one. We don't want to do deals just for deals' sake.
Still looking for the turnarounds.
We're still looking for the turnarounds. Yeah.
Okay. Well, I don't know. Maybe in a few years we'll call you the turnaround king.
Call my CFO the turnaround.
Call Perez the turnaround king.
Call him the turnaround king.
Absolutely. All right. Well, thanks for sitting here and talking about it.
Well, thanks for having me.